The following is a conversation with a fellow Irishman, Stephen Dowling, who lives in Melbourne, Australia. Stephen is a consultant and project manager, and he helps organisations unlearn the past and relearn new ways of working.
With my good friend Brendan Sheehan from White Squires. Just going to have a bit of a conversation today. I think you were saying that what's that recent report that's just come out by ACCA?
Yeah, so ACCA is the Association of Chartered Certified Accountants, and they've got a new report out, which is sort of the most recent one of a series of reports that have been out over the last maybe 2 or 3 years about the evolution of the finance function and the role of sort of finance and the CFO within the organization generally. And this one obviously has the spin of COVID and the pandemic as a sort of basis of where we are now, you know, where things have changed as a result of the lessons learned through the pandemic. So it came out the end of June, 30th of June, I think. So it's quite topical right now. It was done in connection or in collaboration with PwC, as were the sort of the previous releases of in the series. So so it talks about the finance function mainly within the corporate environment, but also obviously non-profit making entities. That sort of structure with the CFO, heads of finance, and then sort of the levels below that, and how they operate effectively within organizations using technology, ways of working, you know, having good strategy that's aligned to organizational strategy. So yeah, quite an interesting report. Good read.
Yeah. And do you think it takes it far enough, Brendan? Because like we've had these conversations before where I just so passionately believe that there's got to be a really significant mindset shift in the finance function just across the board. And, you know, and this, you know, I've been involved in a couple of the different reports, and it's heading in the right direction, but I just don't feel myself that it's sort of really disrupting at the level that it needs to. Would you agree or disagree with that?
Well, okay, so we're probably jumping a bit too far ahead, but for context, I think the finance function, like any function within an organization, has evolved dramatically over the last 10 or 15 years, 20 years, as a result of technology, right? So the accounting work of today is at its very fundamental basic level the same as it's ever been since the invention of the double entry bookkeeping system back in the 1800s. But
Pacioli,
Luca Pacioli. So it's fundamentally the same basic foundations as a discipline within the profession of accounting and within the organizations that accountants work in. But technology and the need for faster, more robust decision making has sort of changed or evolved the role of finance to be less of a sort of a bean counter and more of a forward-looking, predictive decision supporter, providing good quality information to decision makers. I think the pandemic then, over the last 5 years, over the last year, has accelerated that evolution for probably, I think they say it in the ACCA report, 5 years in 5 months. So this idea of we're now all working remotely. The finance function had enormous demand on its time and expertise over the last 18 months to be able to come with good quality information to support decision making in an agile, you know, constantly evolving sort of economic environment. And the skills of the finance professional came to the fore in that, and things like looking at the sustainability of supply chains, looking at cash flow forecasts, looking at revolving credit facilities from banks. There was, you know, investing and divesting from investments that were on the table, looking at opportunities and evaluating them, taking technology improvement opportunities and accelerating them where opportunities. It's a massive amount of demand on the finance resources, and I think generally speaking, finance people were working more than the average hours. They were working sort of, 50, 60, 70 hours a week for your normal worker, your normal sort of finance accountant worker, and doing lots of overtime in that process, and have demonstrated capability and raised the visibility within the organization as a result. So I think what ACCA's report now talks about, and this is getting back to the question you asked, are we going far enough, is that has now created an opportunity for finance professionals to jump up to the next level and not fall back into that bean counting role, to actually use this opportunity to be able to support the evolution of their organizations. And I hesitated there to say the word growth of their organizations, because that's not necessarily what organizations should be looking for, maybe, but we might leave that for later on in the conversation. But this situation with COVID and the pandemic has created this opportunity or potential for a finance function to accelerate its value to an organization.
Yeah, no, I get all of that, Brendan, and you're right. I can see that happening. I suppose I just, like, even, the assumptions that we have around functions, finance function, IT functions. When I look at the most advanced organizations now, they're removing this kind of functional silo, and they're looking at value streams, they're looking at customer journeys, and they're organizing their whole organization around the definition of value for their organizations. And to me, this is just one of the things that we're still in this kind of silo. And, and it's only by getting out of these kind of silos. And like you say, and I totally get the value that finance are bringing in decision making, but I will still argue that a lot of the information is based on lagging metrics and lagging data that they have. Whereas, again, the rate of change that's happening in environments now is just, the pace of change is just phenomenal, and it's not going to slow down anytime soon. So what businesses now, in my experience, are crying out for is much more metrics around leading measures, that give indications of behavior and movement for customers, and you're providing really good, valuable, and the decision-making data that's needed is this kind of operational data rather than just financial. And obviously linking the two of them is critical. But again, I just feel like a lot of the traditional finance and the kind of way the design of things like the chart of accounts and the way things are done, it's like a straitjacket that's put on organizations. And up until we can really step out of that, I just think we're always going to have certain kind of limitations in terms of how well finance will be able to support that business decision making.
I agree with you on one level, and it's almost about, I can sense the impatience in you, and I'm impatient too. I think there's the evolution has happened faster over the last 18 months than it has ever happened before. Firstly, because of the technology accelerator, but secondly, obviously, because of the pandemic. But I think there's still some limiting factors in there. So if I talk about one of the barriers to the old traditional, to evolving out of the old traditional way of thinking, we have to sit in a 30-floor building in the middle of the CBD in order to do our jobs in a single department on one floor where all finance function are all crammed in together. That is not the case anymore. I mean, that has been dissipating over time, but the pandemic has just shown us that we can actually work anywhere and do our jobs more effectively than we had been doing it previously. So that's one of those barriers is coming down. Technology is obviously evolving now as well. And I think things like, Teams as an example for communication has been has evolved over that 18 months. Zoom or Teams, or those online meeting technology. What is to go with that? Anyway, but I think also things like your Power BI dashboards, your data. People are talking about data lakes a lot more at even the mid-tier level of organizations. We're talking about how important data is to our decision-making process, good quality data. And just sort of to touch off something on that, I saw this somewhere, somebody said it in something I was watching, where nobody can ever complain that we don't have enough data. That's not the issue. There's loads of data. The issue is, how do we structure that data and put it in a way that helps to support the decisions that we're making? And I think that's the opportunity where finance professionals have a significant role to play in there. But they are still limited by some of the technology that's in their organizations. Exactly to the point you said, the old GL system, that old ERP mentality is a limiting factor, and it's starting to dissolve a little bit. That you also have the ability of finance people and other support functions to be able to have commercial level business type or conversations with their business, with decision makers. They need to get more understanding of the commercial workings of their business in order to be able to have those level of conversations, to be taken seriously in those conversations. So there's limiting factors that are not just about the chart of accounts. It's more than that, but it has accelerated massively over the last few months. So can I pick into some of the things that you think are limiting factors, other than sort of the GL structured bookkeeping, debits and credits thing? Tell me a bit more about what you think is limiting.
Well, again, I suppose, like, I come back to, so when you look at the GL and the chart of accounts is the big sort of structure that I feel like is like it sits over across a whole organization, and the way that the organization's designed is sort of hangs off that. And again, the way the budgeting is done, the way, all of the reporting is done, the captures of actuals is sort of driven by that. And when you look at organizations now and how fast they need to be able to move, then I just feel like this becomes a bit of a straitjacket that's put on organizations. And and people, will end up spending time trying to reconcile things and, make sure that everything connects. And don't get me wrong, I totally understand the importance of compliance and statutory regulatory stuff that has to be done and has to be done to comply with legislation and all that kind of stuff. But and to me, I suppose I look at, when you think of finance, there's two main functions of finance. There's the financial accounting statutory side, and there's the management accounting side, which is, like you say, Brendan, it's all about decision making and controlling the work that the organization is doing, helping make really good decision making. And the way I see it, and just the accounting profession, there's always been that bias towards the financial accounting and that kind of, statutory compliance, whereas to me that needs to flip, and like you say, technology is driving or enabling that flip, I think, because a lot of the routine stuff can be taken away. But it's like exactly like you say, the management accounting has to become, supporting business and making good, fast, quick business decisions is so important. And if you go, like, if you think of your clients you work with and you sort of go to them and say, down to the real operational side, and you ask questions like, well, how much value does the finance function bring to be able for us to be able to make good, fast, quick business decisions? And I don't know about you, but my experience is typically the general, and I know I'm being generalizing here, but typically the organizations that I'm working with that are at the sort of the coal face in terms of, fast changing dynamic environments, they're saying finance are lagging behind and they're not really adding the value that they should be doing to drive, like what you're saying. We want to be there. But
well, I would have the exact same argument about HR, IT, marketing, sales. You can have that argument with everybody. Everybody's lagging behind. They're all going as fast as everybody wants. There's a lot of impatience. So can I just come back to from the finance function about what the role is? Because you touched off something in terms of, like, I understand all the regulation and all that stuff, the compliance stuff that we have to do. Yes, we do have to do it. That's a really important part of working in a free and open capitalist market, is that it's fair and people understand the information that they're reading, that they're basing investment and capital allocation decisions on, right? So if we don't have rules to the game, then you just get craziness. You get dictatorships, and you get Enron, and you get things like that, right? So the basic, we can't lose sight of the importance of having a clearly understood framework for within which we can make decisions around investments and capital allocation. Okay, if we can't agree on that, well, then I think that there's a problem there. I think the second piece of it then is, given that, what is the role of the accounting profession within organizations? And so first, it's to make sure that we're operating within the framework within which our society that we work in has agreed. This is the way we do it. This is the way we work together, right? The second one is, how can we support good, I'm trying to articulate this properly. How do we get better at what we do, right? So I'm talking about that from an operating model perspective. So we need to be able to get better, faster, smarter, quick at the functioning of our organization within that framework, right? So that's about, how do we use technology to make our stuff work faster? And that involves understanding technology, understanding people, understanding ways of working. And that is a role for finance. Finance need to have that understanding in order to be able to really excel in that area. And then the third bit is, given that we are operating within a structured framework in a free and fair society, and we are driving an efficient operating model, how do we take advantage of market opportunities? Now that involves having commercial understanding of the business that you're in, and secondly, understanding the market within which that operates, and what an opportunity looks like, but also what the risks around the opportunities are, and how we manage them effectively to get the lowest risk, highest opportunity out of those opportunities that we do pursue, and the investments that we have. And one of the things that we've talked about in the past, Stephen, is about if you think about a finance CFO's role, right? They're at a very base level, it's about almost being the banker in the business. So there's opportunities everywhere. There's so many opportunities flying past the CFO's mind all the time, that his or her job is to prioritize and be selective about the opportunities that the organization should pursue. And that comes down to base level measures about internal rate of return, net present value, all those kind of things, cash flows, and then obviously qualitative aspects of risks and benefits as well. So that's their role. The role is that sort of, I won't call it gatekeeper, it's not quite the right word, but they certainly have an oversight role on where the organization spends its money and how it invests. And that could be in technology, new markets, new people, new skill sets. There's a whole bunch of things they can invest in. They can buy new businesses, they can enter new markets geographically or product level. So all of that goes on in the CFO's minds. And the function underneath that has to be stacked up towards that decision, because that's fundamentally what they're there in an organization to do. Sorry, I talked a lot there, but that it's really important to understand, I think, that foundation of what the finance function is there for, what its purpose is in an organization. And it really does, for me, stack up on those three levels.
Yeah, and what you say, I can't disagree with, Brendan. The only problem I've got, and we've had this conversation before, is that when it comes to, and what we talked about, the chief financial officer, the chief performance officer, and they're both, like what you've just said, that their job is to do both of those. But what is more important? And I will, they're both really important. But to me, it's all about performance. You want to enable performance. You want to deliver as much value as quickly and as fast as you can, and minimize the risk and uncertainty that you're having. So I completely agree with that. Where I have a big problem is the rules and the guardrails and the kind of the thinking that goes into the CFO's mind in terms of how he makes those decisions. And to me, there isn't enough flexibility in the because nature of the kind of world, and you use the word, you know, return on investment, net present values, internal rates of return, all these kind of measures that are used to make investment decisions. And when you look at the rate of change that's affecting organizations now and the speed at which things are changing, and you look at the kind of logic behind those metrics, like you take return on investment, you know, benefits over costs, and you look at all of the underlying assumptions that are underpinning all of those, but yet, and to me, all I will argue is that there's got to be flexibility into the way we make decisions. And if there's sort of types of decisions that need to be made and there's lots of uncertainties that you don't know, then the way we operate is in small little iterative cycles where you constantly review what you're getting, you have opportunities to decide what you're going to do. And then for other things where there is more certainty in terms of decision making, you can make those longer term sort of decisions based on the traditional metrics and measures that we do. But it's just, to me, when I look at the speed and the rate of change, there isn't just those measures are not, there isn't the flexibility I see where that finance functions are coming with that kind of mindset to say, well, okay, let's understand the kind of opportunity we've got here. So now when it comes to making a decision about allocating funding, is this something that we've done 100 times before? Yes, okay, lovely, we can use the traditional way. Here's something that we don't know there's a lot of uncertainty here, so therefore we're going to have a way of funding this in a way that we feel safe, that we're not going to be wasting money unnecessarily, but we're not going to stop experimenting or going down and trying to uncover this if it is an opportunity. And it's just, to me, there's just got to be more openness for having the flexibility. And I just don't see that happening now, Brendan, with the kind of, it goes through this traditional cycle. You've got to have a business case, you've got to put together your costs, your benefits, and then there's no funding allowed unless we get to this. Whereas to me, I just think there needs to be...
I don't see that in the same way as you do. I think that for a start, I don't think the CFO is the only person who's holding the purse strings and stopping people from doing investing in the way you're talking about. But no rational CEO, or not to mind a CFO, would throw money at something without at least understanding what are we hoping to get out of spending this money. Like no rational human being would do that. So I think that the basis of CFO's decision making is and support for initiatives of the sort that you're talking about is about a rational cost benefit framework for how that investment is going to work itself out. So you got to go. It's like that expression: failing to plan is planning to fail. Is that it? Is that the one? So like, if you don't at least have some understanding about what we're expecting to get for our $1 million here.
I'm not saying. I'm saying planning is really important, but it's just the level at which you're making a decision based on the amount of planning that you can do. Because
that's only degrees of what we're talking about here. So I think what you were alluding to is that CFOs have this like 9-month detailed, massive spreadsheets based business case process. The ones that I work with don't have that at all. They want to see at a very basic level is, if I give you this money, am I going to get it back? Am I going to get it back with a return? And what's the potential risks around this of me not getting it back? That's what they want to see. Is it worth me giving you this $1 million? So if you can say that on one single slide in PowerPoint, fine. It's fundamentally a business case, is a commitment to do something and to repay the loan effectively. So I think the degree to which you want to go to that level of analysis and supporting a decision making is based on personal preference and other dynamics and risk-based understanding of the situation. But at the end of the day, it's about looking me in the eye and saying, I'm going to give you your money back.
Yeah.
That's the way I see it.
Yeah, but isn't, Brennan, like, like obviously spending money in an organization, there's and it's rightly, there's processes that are there to try and make sure that we don't, like, exactly like you're saying, we're not frittering money away, we're not sort of doing stupid things. So you've got standard processes, and yes, you've got a CFO who sits there at the top, but there's a process. There's a process that's there.
Sure.
And you've got to follow that process. And if I'm sitting there and I'm a business person and I'm out there frontlining my business and I've got all these competitors breathing down my neck and I'm trying to do things to be able to compete in a really fast changing dynamic environment, and I'm saying, oh, hang on a second here, I've got to go through the process, I've got to get more funding, and then meanwhile, boom, 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 time goes on. So it's just because I don't disagree with where you're coming from. I just don't see this in the organizations that I'm engaging with, Brendan, where there isn't that flexibility. There's a funding model that happens, yearly, and it's like that. You go through a budgeting cycle. So many organizations are still running annual budgeting cycles. Like in this day and age,
yeah, but what's the purpose of the annual budgeting cycle, do you think?
The purpose, the whole, like when you look at the purpose of a budget, and to me, this is probably getting to the root cause of a lot. Like, to me, the budget is a combination of a forecast, it's a combination of capital allocation process, and then it's like a target that you're setting for people, or setting some kind of limits. And to me, they're three very, very different things. And they shouldn't be all boiled into.
It's a forward plan, isn't it? It's a forward plan that says this is what we're going to do over the next 12 months or 18 months or 2 years, whatever. That's it. Basically, that's what we're saying. So we're breaking down everybody's ideas and thoughts and innovations and all the stuff that we want to do that's going to help us get from A to B into some sort of numbers, some sort of common language that we can all understand and we can hold people accountable to over that period of time. So the degree to which you go down to the nth level of, your GL coding and this dollar is going to be spent on this bean, that's not the purpose of a budget. A budget is a high level support for a plan. Now, how many budgets do you know that ever get actually bang on, that people deliver right to budget after 12 months? Zero. Yeah. Nobody ever achieves their budget, right? Or they never get exactly. They might exceed the budget, they might get come in under budget, but they never get bang on the number, right? So it's a high level plan. It's a confluence of ideas and thoughts and processes within an organization that's put down into a spreadsheet, and everybody looks each other in the eye and go, yep, we're all in this together. That's what we're going to do. Now, things change over time, and flexibility has to be built into the budgeting process down the line where we go, okay, we've got variances to budget. If we want to achieve the things that we set out to achieve at the start of this process, and we still agree that they're the things that we want to achieve, well, then we need to move some deck chairs around, move some numbers around, but we never expect there not to be some stuff that's over and some stuff that's under. That's just.
But it drives behavior. That drives, like, there's so much. I will argue there's so much behavior, negative behaviors driven by that. And I
agree. It depends on how rigid that process is, but it's not the CFO on their own that makes that rigidity. It's the organization, the shareholders, the boards, the CEO, the other people on the exec team, the general managers. It's a dynamic. It's not the CFO on their own that's saying, you have to stick to my budget and that's it.
No,
that's not the way it works.
No, but to me, this is, I'm really glad we're talking about this, because I think this is one of the root causes. If you look at, I think the whole budgeting process should be blown up. I think for it's something that is so dysfunctional. And if you look at the history of budgeting, it goes back to McKinsey, back in 7 when he was running, or Sloan, I think it was. And they were trying to make sense out of the amorphous mass of one of the big car companies. But when you look at now companies that there's Handelsbank is an example of a bank a European-based bank, which has been one of the top banks in the whole of Europe. They haven't been using an annual budget for 60 years. Like, and they have controls in place, but they're different types of controls. Because again, I just think this is something, and you know, like you say, there will be organizations where there is flexibility, but to me, I don't know. Again, I look at this and I see it. It's like you say, it's a confluence of three different things that are all merged into one: the target, the forecast, and the capital allocation. And to me, each one of those are very, very different. And by combining them together, it creates so much dysfunction. And you need to be able to do each of those in a very efficient and effective way, absolutely, but they're not the same thing. They're very different. A target, an aspiration of what you want to do, a forecast of what do you think is going to happen, rightly or wrongly, and then capital allocation. How do I make sure I get the most money from what you were saying earlier in the conversation? Absolutely. If I'm spending or allocating capital, I want to make sure I'm getting the maximum value. But the trouble is they're combined into one thing, and they're just very different things.
Well, they're not. They're linked. Like you can't. They're linked, right? You've got the profit and loss account, the balance sheet, capex and OPEX, for one better way of saying it, and then you've got the cash flow component in the middle of it. Yeah. So you can't invest in assets or opportunities unless you have good cash flow. And cash flow, one of the channels for cash flow is your profitability, your revenue minus your costs, right? So that just it's linked. Your others is going to a bank and getting a loan, but ultimately that falls into your balance sheet and how you pay down liabilities and stuff like that. So that's a sort of an in and out of the balance sheet. So they're very much linked. They're not three totally separate things that you can just do in isolation. But can I just come back to your Handel Bank or whatever you're talking about there? I've never heard of that bank, right? Yeah. And I know of lots of banks and lots of pharmaceutical companies and lots of technology and engineering companies and professional services companies that all do budgets, and I've heard of loads of those. So I think thinking about the budget in terms of a rigid 12-month budget is probably where the limitation on the thinking around budgets is. I'm not saying that the 12-month budget is a absolutely critical, necessary component of any functioning operational business. There's flexibility in that. I completely agree. I think the budget process should be blown up. I spent years putting together budgets and spending hours and sleeping overnight in the office trying to put these things together, and then 2 months later, it's bloody useless because people have
you look at COVID,
right? Yeah. Right. Okay. So I agree in having rolling budget type models. I agree in having flexibility around your models. I believe in all of those things that we talked about. But what organizations are actually doing that and doing that very successfully is probably the case in points that you need to do. So one bank that I've never heard of doing it is good, but like there needs to be a lot more of evidence of that for the mass profession to follow it. The profession is advocating for that kind of thing, absolutely. Yeah. But show me a better way than the way that is in place right now, and then we can have that conversation about it. And I think this is what I'm going back to. It's the budget is just a confluence of ideas and creativeness and with people coming down and putting it on a spreadsheet, putting it into a common language that people can look at each other in the eye and go, yeah, we're in this together, let's do it. Right after that, as soon as they walk out of that room, it's the human commitment to trust each other and do what they agreed to do that's actually the issue, not the spreadsheet and the numbers on the spreadsheet. That's just a tool to get people back in the room to understand why there's been a variation in this thing that we agreed on, and to understand a way to work through that in an agile, adaptable, market-driven, customer-centric, focused way.
Yeah.
Does that make sense?
Yeah, it does. But then it's like, like you were saying, Brendan, like if you've got budgets with all these variances, and like you say, after you agree your budget, then, 2 weeks later, it's out of date. And then all this wasted time that's getting there, explaining these kind of variations, what assumptions behind the budget, what do we get? And it's like, in finance are busy trying to explain all this crap. Meanwhile, the world's changing really fast, and you think, well, what am I wasting my time doing?
So it's not the actual. I'm going to read between a couple of lines here. It's not the actual budget as a philosophy or a principle that's the problem. It's the process by which the budget is put together and its usability to be able to trigger and support business level decisions. That's the questionable part, right? So it takes a lot of time because of the probably data issues and probably technology issues that are limiting the ability to move away from that process of putting a budget together. So if the technology was better, the data was better, and it was a more fluid, real-time process, then that would alleviate that problem of putting the budget together. And then in the latter stages of how do you use the line in the sand, the roadmap that we've laid out, the plan that we have, how do we use the budget to be able to support understanding of variations from that plan and to allow flexibility and adaptability to new circumstances or emerging circumstances or circumstances that we didn't know existed, but they always did when we were, like, just to be able to adapt around new information. That process needs to be improved, and the technology is coming through on that, and the data is probably going to come through, and in the next 3, 4, 5 years it'll be phenomenally different from what we see today, just like today is phenomenally different from when I was starting my career and I was using A3 analysis pads and pencil and rubbers to erasers to you know, do my work when I started 28 years ago, 30 years ago, right? So it's accelerating massively, and I can't imagine what the budgeting process will look like in 30 years time. Like they probably won't have jobs anyway, because the robots are going to be all doing it. But anyway.
I don't know. I just fundamentally do believe that there is a problem with that, and I agree with you. They're connected, and that cash flow and the balance between capex and opex. I completely get that, but to me, you know, those three elements: the capital allocation, the targeting, and the forecasting. You know, and to me, it's like, you know, take targets. You know, like you want people to give you a sort of, you know, set a target for the future. And if their bonus is going to be based on something, or their remuneration, then there's obviously behaviors that are going to be driven based on that kind of stuff. And if you want people to forecast, you know, you want honesty, you want people to be able to, you know, give you honest kind of feedback. And again, it goes back to the rewards and mechanisms that you have in your organization. If this is all connected, then trying to get the kind of behaviors and the kind of that you want is going to be very, very difficult. And you know, like, give you an example, like in that, and we've got I'll share some stuff with this Handelsbank, because you're right, that's the question I've always raised in my mind. Here's an example of a bank that's been doing it for 60 years. You haven't heard of them, and you sort of think, well, crikey, if they've been so successful, why have people not adopted it? Why has it not become? And there's a big group, there's a group called Beyond Budgeting that have been there for the last 20 years, you know, and there is other organizations that do this and have adopted this kind of way of operating, where they don't have budgets, but it's still very much in the minority. And the question that goes through my mind is, why on earth, if this works so well, why has it not become mainstream? And I just, you know, I just so strongly believe that to get people to shift from their thinking, it's very, very difficult, because we just have these beliefs. This is the way we've done it. This is the way we've always done it. And like you say, to get people to shift and to do something totally different is a really big leap, very big leap. And you're right. You like what you've just said, Brendan. Everybody, accountants by their nature, will say, well, show me the evidence, show me all the case studies, show me all this stuff before I will, you know, consider going on this journey. And I think they haven't really done a really good job, I don't think, of helping to really bring this into the community. And you know, like, they have a, you know, there's a company, it used to be called Statoil, they're now called Equinor, where there's a great guy, I've got his book here. his name's Bjarte Bugnes, who wrote this book, Implementing Beyond Budgeting. He won the Harvard and McKinsey Innovation Award back in 2007 for this, based on this, the story that he had with Statoil, as they were called at the time. And they had a thing where basically, from a capital allocation point of view, the bank is always open. And if people have good ideas, they can come to the bank. Now, there can be constraints that are there, obviously, with the cash flow and what they have. But basically, the world that they have in their organization is, if somebody's got a good idea, the bank, you can always go straight to the bank and try to justify getting money. Now, if there isn't constraints there, then money can be released. But it's not just once a year you get it one crack at the cherry to say, here's what we're going to be, investing in for the next 12 months. And if you don't get your slate, or you're not on the slate, then tough. You got to wait till the next 12 months. And when you think about the kind of dynamic world we're living in now, that's really dangerous.
Yeah, of course it is. And not to have any flexibility within that is not only ridiculous, but it's probably not good governance either. It's good governance is not about making sure everybody stays on the track that we've all agreed. It's about being able to adapt and be able to react effectively, but responsibly to react with market dynamics or whatever the new information is. But it's about responsible adapting to situations. I think so I don't want you to in any way think, and I know we've had these conversations before. I'm not defending a position here at all. I think what is absolutely clear is that the finance function has a very important role to play within any functioning organization. I think the evolution of the finance function has accelerated phenomenally from pencils and paper through spreadsheets through to current ways of working, and it will accelerate even faster now with more advanced technology, and as we talked about the ways of working. So I think we want to see the profession evolve, because the things that accountants can actually have a really important role to play in the evolution of their organizations and the society within which they work are things like sustainability, inclusion, diversity, innovation. It's about using their skills to be able to evolve that. It's not about just the accounting processes. And I said that earlier on, like the fundamental role is about making sure that we're operating ethically and responsibly within our society. The second one is about making sure that our operating model is working efficiently. And this is the area where I think finance is going to excel over the next few years, is in that supporting innovation and opportunity and development and evolution of their organizations. So part of the stuff that comes through from ACCA, a lot of this sort of thought leadership is around that. It's about what is the role of the finance function to play when robots are all doing all the jobs that accountants used to do. And we're very focused on that. We're very focused on being able to identify how our skills support and match to that opportunity. And as an example of some of that, inclusion and diversity is something that's thrown around a little bit on a sort of a social justice level, where it's seen as almost like a guilt thing, where you have to be diverse, you have to, but actually the thing that most people miss is the opportunity that comes out of diversity. This is actually a capitalist idea. If you have more people with more diverse thinking coming from more diverse backgrounds working together, that's where the creative spark comes in organizations and creates opportunity. So there's actually a dollar incentive around this. It's not about guilt and about balancing your ethnicity and religious and gender balance within an organization. So they're the kind of things that accountants are thinking about, not the budget process and the mechanics of holding people to account through that process. It's about how do we take those fundamental disciplines and use them to promote opportunity.
Yeah, no, I love that, Brendan. And I think
that's exactly where we're going, though.
Yeah, well, I love that, because to me, that's absolutely where we have to go. Yeah, couldn't agree more. It's just, I suppose it's, it comes back to that whole thing where, we talk about it, like, there's these kind of spectrums that we operate on. And it comes back, I think so much of it comes back to our mindset. What do we believe to be most important? And then that, whatever we agree to be most important, is something that then drives our actions and our behaviors. And if we have, like what you've just been articulating to me there, if we have accountants that believe that inclusion, that operating model, that is most important, and then that is then said, okay, how do we organize? How do we design our organizations? How do we build our sort of financial models and all that kind of stuff that sits behind it? Because it has really big ramifications. And it's just, that's the kind of, we've come from a traditional management model where we have this old world that's embedded into so many of the finance functions. And we've got to go to where you've just been saying. I completely agree. But that's a big shift. It's a massive shift, and it has huge ramifications. Yeah.
So it's a big shift depending on where your starting point is, right? So it's a big shift from paper and pencil, but the acceleration of the ways of working, which is supported by advances in technology, has made that shift, has closed down that gap a lot over time, and it will close it even more in time. But I think you're right, it is about mindset. It is about people within the finance function understanding their role very clearly, and not even very clearly, but certainly moving beyond this idea that it's about the fundamental regulation, compliance stuff and the efficient operating model, and move more into that sphere of decision support and growth and those type of things. So, you can't lose sight of those other foundational blocks either.
No, absolutely.
So, right.
Yeah.
But those for sure have to evolve, right? So even if you think about the regulatory environment and the compliance level, you see things like Bitcoin coming in and challenging that. You see things like the in the past, things like opening borders and technology, the way that it's opened up market opportunities for labor arbitrage across Southeast Asia and other areas to be able to get things done, get lower value processes done more cheaply. Like, all of that created regulatory environments that need, and the regulatory environment evolves as well. So having an awareness of what that is, how it's evolving, contributing to that, which is what the accounting profession does for sure. They want to create a fair, equitable regulatory environment so everybody's working on a level playing field. That's a really important role for accountants. And then knowing that's where the opportunity is at the far end.
Yeah.
About the supporting decision making. I think what would be useful, I think, now to not to wrap this up, but to say maybe create a segue into our next conversation, Stephen, might be to just agree where we disagree, if that makes sense, and then let's use that for the next time we talk. I think that would be helpful, would it?
Yeah, absolutely. I think I'd like to just dig a bit more into the budgeting stuff, Brendan, because I just think I do truly believe that this is one of the deep root causes of so many. It sort of has threads going into everything, and I just feel like we're still not on the same page there exactly. So I'd love to explore that a bit more, and I'll share some stuff with Handelsbank with you, just maybe as a bit of a background for the next time we chat. And I think that'd be, because I really would love to. This is a really big one, and that book that came out beyond budgeting, it was a really watershed book, I believe. And again, I just feel like it's not. Yeah. Anyway, I'd love to dig into that.
Let's take that forward. Here's one from me then. So I would like. So I'm a CFO, and I've got all this money, and I've got all these opportunities flying by me all the time. and I can just reach out and grab them anytime I want to. The world is full of opportunities, right? So I've got a certain amount of capital that I can allocate to those opportunities. I would like to understand how you, with where you're coming from, present that case to me. So we talked about it earlier on. I want to know, how much do you want? When am I going to get it back? What's the return on my investment in this opportunity? And how are we going to mitigate or manage the risks around that, so that I maximize my chances of getting my money back with a return on it? That's fundamentally what I need to understand. How much do you want? What do you want to use it for? When am I going to get it back? How much more am I going to get back? And how are we going to make sure that it doesn't fall down some black hole somewhere? Okay, I would like to hear your argument on me giving you $1 million.
Okay, that's really, you're right. That's a brilliant one. So I think those two things would be great to have the conversation next time. Yeah.